It is so funny. I mean, you see these memes if you're on Twitter, but I mean, it really is just a case of, the whole asset class is up like 10 or 15x, but every single time there's a 10% pullback, people get really spooked.
Yeah.
What we're looking at here is liquidations over a 24-hour period. This was on November 16th, so you had almost $1 billion in liquidations. But I want to get into a couple of charts, and this comes to us from an interview. We're friends with the Bankless guys. They did just a phenomenal interview with this guy, Benjamin Cohen, who I'm embarrassed to say I'd never watched any of his stuff before now, but I thought, I never think it's a good idea to try to time markets, but man, if you do try to do that, I would look at this guy's stuff because it is really, really excellent fundamental analysis of different market cycles in crypto. And Mark, you and I talked about this a couple of weeks ago, but what we're looking at here is Bitcoin or crypto cycles since, and you're looking at cycle 1, cycle 2, cycle 3, cycle 4. This is 2009 to 2011, 13 to 14, 17 to 18. And the current one that we're in. And there is this dynamic of both kind of diminishing returns in the overall growth or just capital appreciation in these cycles, but also you do see this lengthening dynamic in general. Yeah. So I guess when you take a look at a chart like this, what are your kind of takeaways?
I think a couple things. I think to your point, the lengthening of a cycle, I think, has to do just with more participants, right? And what these cycles represent is the natural cycle following these halving events, right? The halving idea was so genius, right? When you think about, you reduce the block rewards. Well, the miners, the people who are securing the network, which I just hate that term because they're not digging up anything, but the security force to make it the most secure, most powerful network computer on the planet, their costs don't change. So in order not to lose money, the price needs to adjust, and that price having a natural tailwind attracts interest. Right. We've talked about this, right? And when our significant others send us to the refrigerator, we can't see the ketchup unless it's moving. So when price moves, then it attracts attention. And so, but then the cycle repeats where the speculators then show up and they buy something just because it's moving. Right. That's not investing. But if you buy something just because the price is moving, that is not investing. That is speculating or gambling at its extreme. And so then when the price moves so far away from fair value, that's when the other side of the cycle happens. And so there is some natural logic to things extending as there are just more normal players that watch the halving cycle play out. And then the speculators come. So I do think there's a natural logic to it.
Me too. I also think just in general, I think it's the natural evolution of any asset class over a period of time. Price gets set at the margin, right? So when you have a larger ecosystem with more investable options and it takes more incremental dollars to flow in to make the price go up, you don't see these crazy parabolic increases, but you see something that looks more healthy over time. And the reason why, if you're listening to this thinking, well, I'm in crypto because I want to see these crazy 200Xs, what I would say to you is, overall, I think the ideological goal of crypto should be, how are we going to take this to 1 billion, 2 billion, the entire world using these networks? And you're never going to do it with the volatility pattern that we see currently, because volatility, while it creates opportunities, it kind of sucks. You get paid for enduring volatility in markets. I got to tell you, it's an unpleasant experience. Most of the world, most people who rely on assets to support their lives can't deal with 60 or 70% drawdowns. Then, so if you are relying on that volatility pattern, then you're really restricting who can use this asset class, and it's never going to grow. So I look at charts like this and I kind of just think, I'm not a charts guy, but it kind of seems like this is the right thing that should, this seems good to me. I don't know if you have a different.
Well, one thing on that, Michael, and I've been talking a lot about this lately, which is this idea that, volatility is not your enemy, right? I even have the shirt, right? Embrace volatility. Volatility is your friend. If you don't want volatility, you cannot have high returns. Full stop.
Mm-hmm.
There is no asset with low volatility. Zero, none, nada, zero. No asset with low volatility that generates high returns.